Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. In a rising rate interest environment, you've got fixed income performance sometimes that can be on the underwhelming side or even maybe a little bit volatile. And for that reason, my guests today look for companies with credit improvement stories. They're also known as rising stars. So joining me now to discuss this are Alina Gallant and Barry McAlinden from the UBS Chief Investment Office. So nice to have you here, Alina. Thanks for joining me. Barry, great to see you.
See you. Thanks, Anthony.
Great. So, Alina, let me ask you, we're talking about rising stars here, and I can't wait to get into this with you. So why does investing in rising stars make sense in this current environment? As we all know, there is a lot of volatility. There's a lot of uncertainty going on. Talk about that with us.
So, Anthony, as you mentioned, fixed income performance can be really underwhelming in a rising interest rate environment. Let's just look at this first quarter alone. Investment grade and high yield both posted negative total returns. Add to that the geopolitical volatility that we've had, and there's really a lot of uncertainty in the fixed income market. So rising stars, they're companies whose scale and scope is really very similar to investment grade companies. But these are companies that are also undergoing credit improvement in order to get upgraded to investment grade. So Barry and I, we actually did extensive credit research here, and we identified a basket of companies that fit this profile. And so as these companies improve their credit fundamentals, improve their credit metrics, the spread on their bonds can really tighten towards investment grade levels. And so really it is the spread compression that can help offset the volatility and the macro events that we're seeing in the overall market, be it rising rates or general macro spread volatility. And then these rising stars can truly outperform in this environment.
It is such an interesting market. We were just talking about this before we got started today, Alina, and for a lot of investors, it can be a bit of a head scratcher. So these rising stars really do paint a really interesting picture about where you're seeing some opportunities. So Barry, we know that there were a lot of downgrades in 2020, particularly from investment grade to high yield. So what would you say has the environment been like since then?
Well, the environment, Anthony, has been a reversal of those downgrades. And, if you just take a step back, how we got there, we had a wave of fallen angels back in 2020 at the onset of the pandemic. And at that point, it wasn't clear exactly how severe the decline in business revenues would be. And we did see the rating agencies react rather swiftly in downgrading certain companies, particularly in two groups. The first group I'd mention, is the energy sector. So it's hard to believe where oil prices are today, how high they are. But, we did have a pretty sharp decline in oil prices in early 2020 that really caused the credit profiles of many companies in that sector, to be under pressure. And the fallen angel wave in 2020, it tallied up to about 180 billion of total par value of debt. About 40% of that actually were companies within the energy sector. So that was one area where we saw downgrades, most acute. Secondly, I just pointed like three big companies. One was a consumer staple company, one an auto company, and one an energy company. These were larger investment grade companies that got downgraded. And just because of their size of debt outstanding, their tally was actually almost close to half of the total, fallen angel wave in 2020. So, as Lena mentioned, we are in a period where the reversal is occurring. We're seeing rising stars, more companies get upgraded to investment grade, and we're seeing a reversal, both on the energy sector front as oil prices, commodities have recovered, as well as these kind of big three companies. One recently got upgraded to investment grade in March. Another one we have on our list of rising stars. So I think to the extent that you see those bigger ones, potentially make it back to investment grade, could kind of mark a full cycle in terms of this rising star wave.
Great, thanks, Barry. Alina, so it's interesting because you have a basket of rising stars that you've been tracking. How have they performed since the inception of the theme? And I guess the second part of that question would be, have we already seen too much of a run up in them where you may not see any more opportunities in there?
Yeah, that is a very good question. So we initiated on this theme after doing all the credit work, and we initiated on February 22nd. At the time, the spread between the double Bs and the triple B bonds was at the wides. What had happened was double B credits truly underperformed the rest of the high yield market, and they dragged the rising stars along with them. So that gap in valuation between rising stars and their IG peers was very wide. Since then, our rising star basket has outperformed. It has outperformed the double B credits, and it has significantly outperformed triple B credits and the investment grade market. We actually, interestingly, we actually had one company on our list get upgraded to investment grade just last week. This company's bonds have tightened by 90 basis points since we initiated this theme in February.
I bet you didn't expect that kind of performance when you're, no one could have expected that kind of performance.
You know, I think we did expect the performance. We just didn't expect it to happen in about a month.
Right, so quickly, right, exactly.
We kind of had a 12-month time horizon. But so it is interesting. So when we look at the basket now, and kind of to your question of where does it go from here,
right.
If we exclude this one company that already got upgraded, and we look at the rest of the basket, the spread differential between our basket and their investment grade counterparts is still around 50 basis points. So the way I look at that is I say, look, there is still 50 basis points of tightening potential on this credit theme and on this basket, and that can allow these companies to continue to outperform going forward.
So there is opportunity ahead with some of the rest of the rising stars that are in your basket of coverage.
Correct.
Excellent. Barry, what do you, okay, so let's go to the flip side of this. If there's anything out there that could deter this theme from performing, what is that, and what are maybe some of the risks that you would recommend to or talk about to investors who are looking to get in here?
First, I think if you think about the risk that rising stars maybe won't outperform, you have to take interest rates into account, because rising stars, to the extent that they were formerly investment grade companies, do tend to have longer maturities, so therefore longer duration, and their bonds, would be more sensitive to rising rates, as we've certainly experienced this year quite a bit. So if you just consider, like, the high yield market itself has a duration of about 4 years. There's not an index of rising stars, but there is an index of fallen angels. And again, many fallen angels eventually become rising stars. Fallen angels, their index has a duration of about 6.5 years. So, it's longer on average. We do, as Alina mentioned, hope to mitigate some of the rate risk, though, by choosing particular credits that offer credit spread compression ability to offset rates, even if they do move a bit higher from what we've witnessed so far this year. And I think secondly, there's risks that a company, even though we think it has a good chance of becoming a rising star, maybe it doesn't materialize. And I think there, the biggest factor to consider is just overall business cycle recessionary risks. And, to the extent that the market may be becoming nervous that we are getting closer to a potential recession, that's when, expectations about defaults would edge higher. Also, credit spreads normally move higher in anticipation of that. Here in CIO, we don't think that we are, close to encountering recession risk. And we think the cycle is still intact. So, overall, I think you just have to keep in mind that when you're talking about rising stars too, they are of a higher quality cohort within high yield. So, the types of risks that we think are more likely to materialize for investors would more be from the performance side of things as it relates to interest rates, rather than from, the credit risk side. Because again, we're choosing credits where we think that their fundamentals, have some tailwinds behind them.
Right, thanks, Barry. And we showed a chart earlier about the rising star and fallen angel volumes, which you referred to, and you could clearly see the significant decline in March of 2020 when the pandemic first hit. But in September through December of 2021, the volume on the rising stars side really increased, and I'm sure since then it's even gone, into that trend. So it's really interesting to track that performance. So as we're wrapping up here, Alina, what would you say some final thoughts for our viewers on this particular topic?
So final thoughts. So I agree with Barry. We expect for the rising star volumes to continue to play out throughout the year. Valuation-wise, we think that this basket really does have room to continue to tighten. And so I would say that for fixed income investors that are looking for up in quality opportunities that want a potential to offset some of the volatility that we're seeing in the market, rising stars is a good thing to add to your portfolio that could potentially outperform the investment grade market.
Yeah, and like you said, with an opportunity for spread tightening, seems to be like this is a good place to potentially put some money to work.
Correct.
Excellent. Well, listen, Alina and Barry, thank you so much. Alina, great to have you in the
Thank you
studio.
so much.
Barry, great to see you, my friend. Hope to see you soon.
Great. Hope to see you guys as well.
Great. You too, Barry. And for more information on this topic and a lot more from our Chief Investment Office, visit ubs.com/views. There's great content on that particular website. And make sure to follow all of our content on social media like LinkedIn, Facebook, Instagram, and Twitter. Plus, you can check out all of our past UBS Trending episodes on demand, as well as the UBS YouTube channel. And in the meantime, if you have any questions about what we spoke about today, particularly with these rising stars, make sure to speak with your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, and remember to keep your eyes on what's trending. We'll see you soon, everybody.